Do you know the difference between project report and CMA report? Watch this video. CMA report. It stands for Credit Monitoring Arrangement Report. This is basically a spreadsheet which is going to capture the past, present, and future financial information about an entity. It means this is going to capture the P&L and balance sheet for the past, present, and future. The beauty of this CMA spreadsheet is it will generate various outputs. That is, it will calculate all the financial ratios. It will generate cash flow statement. It will assess the credit requirements. It will generate fund flow statement for analysis, and it will also generate all the working capital holding levels, basically inventory holding level, debtors collection period, creditors payment period. So it acts as a great tool, or we can say this is the financial modeling done for loan purposes. Using this report, lenders will be analyzing the financial position, operational efficiency, cash flow, and fund flow management of an entity for taking lending decision. Whereas a detailed project report, or say the project report, is an official document which is going to communicate the objectives of the project which an entity is undertaking. It will show how the entity is planning to implement the project. So the project can be anything which is considered as capital expenditure with substantial investment of money for creating assets and for which they are approaching the bank or financial institution for long-term loan. So this project report basically communicates the thought process of the management, how they are planning to implement the project, why taking up the project is very important for them, and how the project will help them to achieve their long-term objective. So this will give in-depth analysis of the project taken up by the entity. It will communicate the techno-economic viability, managerial capability, repayment capacity. So a well-drafted project report will enable effective project analysis and quick loan processing. We can even say the quality of the loan sanction and assessment process depends on quality of this DPR. And let me tell you one thing. The CMA report is actually one of the report or one of the component in DPR in case of term loans. So that's about the difference between CMA report and project report. And here we go. Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.